Hello and welcome. My name is Sabrina Miehs from Helaba Research and Advisory. Today we talk about sustainable finance with a focus on the ICMA Green, Social and Sustainability Bond Principles and some current developments such as the EU Green Bond Standards. I'm happy to welcome my guest, Simone Utermarck. She is Director Sustainable Finance at ICMA, the International Capital Market Association, and will give us some insights. Simone, welcome. Good to have you here.
Thank you, Sabrina.
Simone, before we come to our topics, would you mind give us a short introduction on ICMA, its work with respect to sustainable finance as well?
My pleasure. So ICMA, the International Capital Market Association, is a trade association. We currently have over 600 members globally in over 65 jurisdictions, which covers pretty much all of the debt capital markets. So we have issuers, investors, underwriters, ancillary companies such as stock exchanges, law firms, and so on. ICMA is divided between three pillars, which is primary markets, secondary markets, and repo and collateral. And then we have two what we call horizontal themes. One is sustainable finance that I work in, and the other one is fintech, financial technology. In the sustainable finance space, ICMA is mostly known for providing the Principles Secretariat, which we have been done since 2014. The principles, as we refer to them nowadays, are the social bond principles, the green bond principles, the sustainability linked bond principles, and the sustainability bond guidelines, which are a mix between green and social. And then around that, we have a lot of guidance that I'm sure we're going to talk about. ICMA is also doing other things in sustainable finance. For example, we also currently provide the Secretariat for a code of conduct that is currently being developed for ESG data and ratings providers. And we also, we were members of the EU platform and are members of other working groups globally.
Great, thank you very much. That sounds very interesting and a lot as a lot of work that is being done within your company. Now you've talked about the principles as a guidance for green and social bonds. The sustainable bond market has grown rapidly in the last years. Just looking at last year, we had a global issuance of at around $750 billion US, and even in the first 3 months, we count $227 billion US. So this is an up of 11% comparing it to the first quarter of last year. So to give us an idea, how many bond issues are aligned with the principles?
Yeah, so we do this little exercise every year actually to see how many bonds globally are aligned to the principles, because the principles have really become the global standard in the sustainable bonds market. And as you said, last year we had an issuance volume of $753 billion US. And looking at that, that actually excludes China's domestic market, but otherwise it's the global sustainable bonds volume. And looking at that, there was an issuance aligned of 98%, and that's actually the same as in the previous years. So you could say almost all bonds globally are usually aligning to the principles.
Yeah, I guess they have really become a market standard, and the market participants are looking at them and also at the revisions. But because I would like to know, how is the revision process organized? Is there an exchange with market participants, for example?
Well, not just an exchange. The whole thing is actually created and updated, if you will, by the market for the market. So although we provide the Secretariat, and often you will hear it's the ICMA principles, we are not the ones that create them in a dark room somewhere. So we work with something called the Executive Committee, which is the main body. It's 24 issuers, investors, and underwriters, so equal part of each of those groups. And every year after the AGM usually takes place in June every year, we start a new term, and during that new term we set up working groups. Some of these working groups have been around for many years, others are created for maybe just a year, or others are new. Currently, the working groups that we have can be found on the website. We have one for social bonds, which has been ongoing for many years, as you can imagine. Then we have the Climate Transition Finance Working Group and the Sustainability Linked Bonds Working Group. Those two are the biggest because those two are the newest principles and subject in the market, and everyone's interested in that, of course. And then we also have a working group on impact reporting that focuses on green bonds specifically. The impact reporting for social bonds is actually covered within the social bonds working group. And then we also have various other task forces on securitization, which was a new topic last year. We also have an external reviewer forum, which is, as the name implies, is only for external reviewers. And then was also relatively new what we started doing last year. I've mentioned in the beginning the different pillars that ICMA consists of or contains. We've also started working with cross committees. So last year we started working with the European Repo and Collateral Committee on sustainable repo. And then we also have a committee that looks at commercial paper, so that's sustainable commercial paper. And those are things that are still in development and would do further work on the publications that are coming out related to those topics.
Yeah. Okay, so it's good to see how interlinked all these groups are and how they take into account developments of the market. Before we come to the questions when we can expect maybe the next revisions of the principles, and before we speak about the other green topics, I would like to turn to the social aspect first. We notice that people get a sense of how important the social aspect is for a sustainable and peaceful future. And it's not about only the plans to improve energy efficiency of buildings, which burden the wallet of citizens. It's about affordable housing, affordable infrastructure. It is about access to a working health system, as we have seen during the pandemic, or about access to education. So I guess the slogan to leave no one behind gets more and more weight if we look at the news today. And so at the beginning of this year, we examined a number of social and sustainable bonds whose purpose is to finance social projects, that is to create social benefit, often for a very specific target group. And when it comes to the question of who or what actually determines what is social, our finding was in the study that issuers consistently apply the ICMA social bond principles, especially because there is no social taxonomy yet. Oh, by the way, when do you expect the social taxonomy of the EU?
Good question. I don't know. So I mentioned earlier that ICMA was actually part of the EU platform. Indeed, ICMA, before I joined, was already part of the HLEC and also the technical expert group, high-level expert group. And then for the last 2 years until October 2022, I was also part of the EU platform, and where I had a colleague who was part of the green part that looked at the usability of the EU taxonomy. I was part of the social part of the platform. What we worked on as a group there was, first of all, a draft report on a social taxonomy. So what could a social taxonomy look like? And the other part was the social and governance component within the green taxonomy, the EU taxonomy, which are the minimum safeguards. But you asked me about the social taxonomy. That was submitted last year in February. We also held a webinar to talk about what it could look like, what social objectives could look like, what it means to do harm, and so on. Pretty much equivalent to what we have on the green side. And that is still with the Commission. The report is out there. It was also picked up with interest, I saw, globally. So we saw countries specifically in Asia picking up elements for their own taxonomies, which was very encouraging to see. But in the EU, I don't know. I can't give you a date. We will have to see. Of course, currently, we still see the platform, the revived, or rather the platform 2.0 looking at further usability issues with the current taxonomy. We also haven't had the delegated acts for the remaining 4 objectives. That's the environmental objectives. So there's still a lot to sort out on the green side, I guess, before we will come to social.
Yeah, okay, I see. Well, so at the moment, the ICMA principles are setting the market standard, we can say, and probably will for a very long time. And one of the core components here is to describe the social issue that will be addressed and how it is hindering the well-being of the society, respectively, of a target population. We noticed that there is a high degree of transparency and consistency in classifying the social projects with according to the ICMA social project categories, which is, I think, helpful as issuers lend credibility to the social aspects of their bonds. Nevertheless, when talking to investors, sometimes you hear the prejudice, well, social investments are not very tangible. Many investments might have been there anyway. So this would obviously contradict maybe the requirement of additionality, which is important for investors or for many investors. How do you think, do the principles try to counteract this?
You forgot to mention, isn't everything social?
Yeah.
Because at the end of the day, also on the green side, if you think about the project category, waste management, for example, or wastewater, of course, if we have clean water, if we have sanitation, if we finance that on the green side, that will, of course, also have a very positive impact on the social side. So this could also be considered social. Well, what can we do? We are continuously coming out with guidance. So we've had the social bond principles since 2018. They came out after the green bond principles, but still have been around for a long time now. However, we haven't really seen much issuance until the pandemic. In the pandemic, we saw a lot of social bonds. There was really a surge in social issuances. We also came out with the executive committee to say, or to rather underline, that social bond principles can be used to raise finance for COVID-19 related issues such as R&D and so on, but also for the conflict in the Ukraine, for example. So those are all things that could also be financed with a social bond. Other things that we do are, I mentioned the impact reporting. We are, of course, working on that continuously. This is also being looked at. We have an impact reporting handbook on both the green and the social side. On the social side, whereas on the green side, of course, we always have the science, so that's a little bit easier, perhaps, to determine in a way what the impact is. On the social side, we like to divide it between output, outcome, and impact, impact being the most difficult one to gauge. But that's also something we continuously develop. We also came out with pre-issuance checklists on both the green and the social side. So these are all things that we do, additional guidance to explain what is social, how can you measure it. We have also on the social side, I should say, we have the social project categories, similar to the eligible project categories on the green side, or rather equivalent, not similar. But then in addition, on the social side, because we don't have the science-based, evidence-based targets, we also have target groups. So in addition to financing a social project, an issuer can also say which target groups are benefiting from those projects. So these are all things, of course, social is still not as defined as green. It's a little bit harder. It's more of an art, if you will, than a science. But I think using all this guidance definitely helps bring transparency and make it a little bit better to understand, or easier to understand within the context often as well.
Absolutely, and I appreciate that you give us the overview of the various guidelines and that are helping issuers to be very precise and concrete here. And I would have come to the impact report anyway, so thanks for that. Maybe another aspect that we found was that the frameworks often permit the financing of the future and the refinancing of past spendings on social projects. In this respect, although the ICMA principles recommend a breakdown so that investors know how much has been financed or refinanced, we were not able to find this in the documentation a lot. This brings me just to a general question on recommendation. There are so many recommendations, and you mentioned the pre-issuance checklist or in the principles, and some of them have already become market standard, although they are only recommendations in comparison to the core components. So I think there are a lot of them have really become best market practice now. But there are also some others that have not. For example, a very important topic for investors, such as the strategy, that the use of proceeds are consistent with the overall strategy. Here there is a recommendation to describe this, but also the SDG alignment. So could you imagine that revisions of the principles would involve a transformation of recommendations to some core components or similar, to give a greater importance on those points?
Hard to say. As I explained in the beginning, ICMA is not creating or updating the principles. We provide a lot of support and we have input, of course, as well, but all of this is really decided by the market. We added those recommendations in 2021, if I remember correctly, and of course, whatever goes into the principles or additional guidance is usually something that is being picked up from the market because it's either already going on. That was the case when we came out with the sustainability-linked bond principles, for example, where we had Enel do the first SLB, and then we came out with guidance for that market because we thought it would be helpful. Or we see something in the market maybe where we perhaps want to prevent this going into the wrong direction. That's also often a cause to come out with either principles or update guidance or anything, or update the principles. But it's really a decision by the executive committee, and then it's executed, if you will, by those working groups, which are, by the way, also coordinated by members of the executive committee. Okay. So we have had those core recommendations to align, well, of course, to align with the 4 core components under the use of proceeds bond principles, and then the recommendations to also have the strategy that fits all of this. The principles maintain that they don't want to be too prescriptive, because otherwise you see all these prescriptive initiatives sprouting up, and we have a lot of taxonomies and so on. Whereas the principles, they really have become the global standard because they're not too prescriptive. They give a framework in a way that can be applied globally. So for now, everything that will come up, I can't reveal details of what we will see in June when we have the next AGM, but to get an idea, you can go to the ICMA website, look at those working groups. All of these are linked to so-called terms of reference, TORs, and they give an outline of what the groups are currently working on and what will be potential deliverables.
But we will have updates in June, definitely.
There will be across everything. There will be updates, of course. Yeah, we always work on something across all these working groups that I mentioned. There's a lot going on. The main areas, as I said, and also the biggest working groups are SLBs and also climate transition finance. SLBs, coincidentally, although you can use them for other areas under environmental social governance, if you will, they have kind of emerged as an instrument to finance the transition. So here we have often a connection where SLBs should be used or could be used in conjunction with the Climate Transition Finance Handbook. So there will be some updates there, which just provide further guidance to the market. So yeah, no new principles.
Okay,
in that area.
Yeah. Okay. So we will have to see what will go on in the section or segment of the sustainability linked ones then. Okay. Looking ahead and turning to green bonds, maybe now everyone has seen the preliminary details on the results of the EU green bond standards, and I was wondering, would you expect the ICMA green bond principles to be refined in any aspect, be it in aspect of technical screening criteria, DNSH, minimum social safeguards, or even in terms of the project category numbers, that they maybe would be extended? Anything that has already come to your mind, information, knowledge?
So I should say, which not everyone might know, as I explained in the beginning, ICMA has been part of the HLAC and the TEC. And under the TEC, I was actually part of that for 2 months. We looked at the green bond standard, which was proposed back then. That was in 2020. And the green bond standard, or the EU green bond standard, is actually based on the green bond principles. So it's not something completely different. The use proceeds concept is actually based on the GBP. However, it is, of course, a little bit stricter, and it is the biggest difference is that whereas with the green bond principles, we have these 10 eligible green project categories, which, as I mentioned, are rather descriptive, not very prescriptive. The EU green bonds are supposed to then be aligned to the taxonomy. So not just be based on project categories, but very specifically aligned to the taxonomy. Now, as you said, we had a preliminary agreement recently. We still haven't seen a final text. So we don't know too many details. What we as ICMA welcomed was that the voluntary nature was maintained, because if you've been following the many trilogues that have been going on in the run-up to this preliminary agreement now, you might have seen that in between there was a brief sort of venturing or idea to make it mandatory. But it looks like they have maintained or will maintain the voluntary nature, which we think is good for the market. We haven't heard on everything yet. We're still also waiting to hear about grandfathering, for example. On the alignment with the taxonomy, there seems to be a flexibility pocket now. So, of course, as I said, the taxonomy in itself is not finalized yet. We're still having 4 environmental objectives, which are not finalized. And then there's also the minimum safeguards, which are not, although we submitted a text during the platform time, we still have the Commission to incorporate that or comment on that. So there is still a lot of usability issues with the taxonomy itself. So it's good that there is this flexibility pocket and not 100% alignment with the taxonomy. Currently, they say 85. But we will really have to see what the final text looks like. The principles are still there. As I keep saying, there are a lot of usability issues with the taxonomy, which of course means there will be usability issues when it has to be used with the green bond standard. So especially for global issuers that would like to use that label, it will not be easy if you have a project in a non-EU country. So the principles are still there to be used. They will not disappear. And if we adjust anything over time, again, I guess I refer to my previous answer. It's the decision of the executive committee. It's the decision of the market, really. We will have to see. The taxonomy can already be aligned. No one says you can't. So it's not mandatory. That's the advantage of the principles. You can actually add it. You can, of course, use the 10 project categories under the GBP, but then in your framework, and we see a lot of issuers have been doing that for a while now already, you can mention the taxonomy if you want to give a little bit more detail as to why a project is green, for example. Yeah. And you can also talk about why it doesn't do any harm. We talk about that in our handbook on questions and answers as well. We call it risks. So you can mention that, of course, as well. In general, the more information you add in your framework, the better.
Yeah. I guess with the taxonomy, the whole challenge really is also to check to be able to check what criteria and also criteria you're mentioning in your framework. There are so many challenges still for issuers, and also we have seen that investors are really comfortable with the principles for the time being. Thinking of the various regulatory pressures like Article 8 or 9 for asset managers, where we thought maybe in the beginning, well, there's a need for the taxonomy aligned bonds, but in the contrast, a lot of them have reclassified their funds. I think investors at the moment are quite realistic, and I agree completely. For the time being, for the transition phase, it's really important to have a framework that is giving you the freedom to be able to transport or to transform or to get the financing for your projects. I will skip the question I wanted to ask you on the reviews, because obviously here as well, the EU Green Bond Standards are asking for certified external review providers, which is currently not in the principles. And there would have been the same question, is that something that market participants maybe move to in a way? But I guess the answer would be the same. We will see what the committee would do.
ICMA is not a regulator, so we can't demand certification or anything. I mean, under the Green Bond Standard, ultimately they would be accredited under ESMA. What we have guidelines for external reviews, and as I mentioned, we have the External Reviewer Forum, where we bring together different external reviewers in order to discuss, although they're all competitors, they all in a way face the same challenges when looking at frameworks and providing secondary party opinions, SPO, for example. So these are things that are being discussed, especially with newer products like sustainability-linked bonds. Often they face the same challenges and have the same questions. So that's being discussed with ICMA, with the ExCom there as well, and with other market participants. And then we also, on our website, we have a list. It's not an endorsement, but any external reviewer that says they're aligned with the principles, they can be listed there. So we do a lot of things with regards to external reviewers already, but we are of course not in a position to require them to be sure. Regulated. But as I understand, a lot of them are not. It shouldn't be too difficult for them, because if you look at all the consolidations in the market, you have a lot of them now, or you find a lot of them where the parent company is actually a listed company, which means they already have to adhere to a lot of regulatory requests. So I don't think it should be an issue for them.
Thanks, Simone. Anything to add on the EU Green Bond Standards with respect to the principles? Anything that you would like to share?
Not really. Okay. You can go to our website. We have published comments on every time there was an interesting trilogue development. We've just recently published something on the preliminary agreement, but of course we weren't able to say much yet because we're still waiting for the final text. But of course, once we have the final text, we will comment again. And otherwise, I would refer everyone out there also to look at our quarterly reports. The next one is coming out very soon, but they come out, as it says, every quarter. So have a look there. They are across everything that ICMA does, but of course, they also have a sustainable finance section. And I've mentioned our website a few times. Please also have a look there for everything around the principles, additional guidance, and watch out for the AGM mid-June. So there will be updates and we'll publish that to the market as well, of course.
Thanks, Simone. I think we learned quite a lot. Many thanks for all the insights. Very, very appreciated. Thank you very much. And yeah, we will look at the revisions in June and talk again soon. Thank you very much.
Thank you, Sabrina. Bye, everyone.